Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. Uh, we are starting to see some signs of life in the meme names, GameStop, AMC, right? And I don't know how long it's going to last, whether it's really going to mirror what we saw in June and then earlier this year in January. However, we certainly know the playbook, right? When it comes to these types of stocks, what we've noticed and what's kind of driven action has been like this very 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 aggressive out of the money call buying. All right, and if you start to see that again, it could signal that a lot of money, a lot of attention is starting to circle back around to these stocks. Some of them, like AMC, is just beginning to break out of like a lower range, right? Names like GameStop have been quiet, but still way off its highs just from where it was in June, especially since January. So the stocks themselves are nowhere near the best levels of the year. However, I feel like the interest is still pretty high in them, right? So if you see like that really aggressive out of the money option activity start to come back in, right? Then that could signal that maybe it's time to see like another. Maybe we get like another one of these runs. Maybe we get like another one of these like pretty wild stretches where the meme stocks really come back into favor, right? Now, in terms of like approaching these, you do oftentimes see the premiums get bid up very aggressively, right? So the implied volatility starts to skyrocket. To kind of maneuver around that, spreads. So I like spreads because premiums get really jacked up. I mean, prices on options that are maybe like 50, 100%, 250% of the money are trading for huge premiums. So how do you get around that? Well, spreads, right? You can manage the amount of premium you want to risk. You manage the amount of money you want to put into a trade better, right? Yeah, you do give up some of the upside, but at the same time, you can get contracts close to their money, lower prices, right? So spreads definitely one way to go about it. If you are looking at those way out of the money options, remember the stock would have to probably have a very significant move for those to get anywhere near the money. So you need to manage those a lot closer, right? If you're looking at options on say on AMC that are trading at like in the 80s, 90s, 100, whatever, right? There's a chance that the stock never gets anywhere near that. So if you're making money on those types of contracts, make sure that you are more active managing them because if the stock does pull back, if the stock pauses, those options that are super, super, super far out of the money are going to see the implied volatility contract pretty dramatically. All right. So I know that that was one of the things that was in favor last time. And if it does start to pick up again, just be mindful that when you're trading options that far out of the money, you need to either manage them quickly or you need to treat them as more of like a lotto idea and see if the stock really does make a move of that magnitude. Okay, so we'll see. Starting to see some signs of life though, and that could make for a really interesting end to the summer here if these stocks start to come back into place. So that's what I'm watching. All right. So if you like this video and you're looking for more information about trading, swing trading with options, or what I mean when I talk about call spreads, please follow up with the link in the description of the video for more information on options in play. Have a wonderful night. Stay well, and then we'll talk to you all tomorrow.